Hey folks, it's Simon here with your Tao Daily video for Wednesday the 15th of May 2024. Markets here are trucking along as if a hot CPI figure is an impossibility, or maybe it is and it just doesn't matter. All right, why would I say that? Well, we had a hot PPI figure out yesterday. It was kind of a scorcher, all right? Headline PPI came out at 0.5% month on month versus expectations of 0.3. Core figure also came in at 0.5% month on month, expectations of 0.2. Obviously 0.5 per month annualizes at 6% per year. That's hardly the disinflationary backdrop the Fed is looking for in order to cut rates. Now, yes, we did get some revisions to the prior month, and that's really what the market seemed to focus on. And that tells you something important about this market, all right? When you've got a market that focuses only on the good news and steps over bad news, it tells you we're in a bull market. That is absolute bull market psychology. And look, that may seem obvious given the S&P is back at all-time highs. I mean, we are like 80 cents off the all-time high in SPY. So we're basically there. Now, in response to that hotter PPI number, Chair Powell said he wouldn't call the PPI hot. I mean, come on, it was hot. 0.5% month on month is a hot reading. And he reiterated that while confidence isn't as high as it was, referring to inflation reaching target soon, he still expects inflation will move back down. Given that it may be restrictive rates take longer to work, he's happy to be patient. He also said by many measures, rates are restrictive and the FOMC strategy is to hold the policy rate where it is. He doesn't think a hike is a likely next move. I don't think rates are restrictive at all. I mean, financial conditions indices are telling us as much. The resurgence of wild swings in GameStop are telling us as much. But what Powell is saying is that even with a much hotter than expected PPI, rate hikes are just not on the table. So maybe that's also true if we get a hotter than expected CPI. Rate hikes are not on the table. Maybe all that happens is that the rate cut that's been priced this year just gets shifted back out to November from September. Equity markets may show a little bit of disappointment if that was the case, but ultimately that's the sort of thing that they can step over. You'd have to think that absent some really ugly news hitting the tape, the path of least resistance remains higher for stocks at this juncture. That's what I got for you. I hope it helps, and I'll catch you on tomorrow's update where we'll be digesting the aftermath of CPI. Thank you.